Moving Iron Podcast is proud to be part of the Global Ag Network. The network is live, so check out globalagnetwork.com for more details and updates. Now on to the show.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Good morning and welcome to Moving Iron Podcast Market Rundown with Shawn Hackett. Shawn, how you doing this morning?
I'm really good, Mr. Casey. Really, really good.
Good deal. Well, we've asked for it, and sometimes you have to be careful what you ask for, but we got the volatility in the market that we're looking for now. So we got volatility all over the place, whether it's corn and beans or whether it is in the cattle and hog markets or wherever it might be. All the markets right now are they start up, they ramp up in the day. Like I just got my alert today. December corn's up 3.5. Kind of did something similar yesterday where it started down almost 3.5, and finished up down a quarter at the end of the days. And it'd be interesting to see what the day does, because on Monday it kind of did something similar where it started up but it finished down. So you're starting to see that across the way. I got to think that the weather is starting to creep into the market now, and they're starting to have a little bit of concern.
Well, we had this incredible bearish sentiment that's been developed ever since the USDA, came out with their quarterly grain stocks and the acreage, and everyone's just been all over the place bearish. The markets and the funds just piled on shorts. But this weather that we've been talking about now for weeks that no one's cared about, we're starting to move to the point where you no longer can ignore it. So, for example, in corn, the next 2 weeks of weather look absolutely horrendous for the south, the center of the country. We have this stagnant pattern where Gulf moisture is just being pumped in, and it's not going to change. And so we're going to get into the middle of May, and only based on our estimate, 30 to 50% of the corn crop is going to get planted by mid-May. When we look back to 1980, there's only 3 other years where we were in this zone for corn, and yields in those 3 years were down 7.5% below trend, down 17% below trend, and down 22% below trend. So what this is saying is not only are we going to lose acres, but when you start not getting corn planted by mid-May, we have some pretty clear evidence that we're looking at yields that are going to be impacted. And so rain makes grain is not actually true when corn can't get planted by mid-May. And looking out beyond mid-May, it still doesn't look very good, Casey. It does not look good to the end of May. And on the northern tier, colder than normal temperatures are expected all the way through this month. Those soil temperatures, especially in North Dakota, South Dakota, Minnesota, where they plant a lot of corn, it's going to be, forget the rain, even if it's drier up there, the soil temperatures are a problem. So the corn market, really, I think is at a point where it's going to continue to ratchet up so long as that kind of a forecast remains in place. And every week's going to continue to escalate, because we're talking about losing at least several million acres, if not more, and thinking about even if it's a 5% below trend line yield, which would be below the 1983, 1993, and 1995 that I mentioned, but a 5% below trend with 2 million less acres with the demand we see now, and we're talking about 900 million bushel carryout, 1 billion bushel carryout, 800 million bushel carryout, depending on how you want to work the numbers out. That's not $8 corn. It's not 360 corn. It's well into the 4 kind of corn, depending upon what's going on with the dollar and all kinds of other things. So the corn market's in clear and present danger now, and the funds are up to their eyeballs short. And the algorithms may get caught hitting buy on the equal sign of the algorithm, and then they all come rushing in. So we really think that could start impacting other markets as well, because if the shorts lose a lot of money in corn, then they cover their wheat position, they cover their cattle position. They start covering everything because they're losing a lot of money. So
Yep. So on that point, if you take a look at what's happened with cattle over the last couple weeks, there's been easily kind of slowing into a more volatile trading period. And I mean, there for a minute last week on Friday, cattle had a pretty rough week. And it's really starting out to kind of be that volatility is starting to creep back in there again when we look at that market. So again, what you just talked about, the volatility that we're seeing in the corn market, just because of the way the funds and where they're based at, we're seeing that volatility take place. What do you see happening with cattle for the rest of the week, and how do you see that shaping up?
Well, we got just a complete liquidation event by long speculators in cattle, which, you know, so what happened is the last 2 weeks, commodities been under tremendous pressure, and the last man standing were longs in the live cattle market, the feeder cattle market, and in the hog market. Everywhere else they were short, and I think they finally capitulated last week because they just said, you know, everything's falling around us. We're just going to take some chips off the table, and we got this, you know, what was viewed as a terrible weekly export report where, you know, we had almost no pork exports at all. China didn't buy anything. And so it set the hog market down, and it caused a liquidation event. So that's happened now. But we're now at an area where we feel that's over, and we think that the market's going to start digging its heels in and start working its way back up, especially if we get the grain market shorts getting nervous. You know, they'll also get you know, more interested in maybe there's an opportunity to go long the cattle market after, you know, as you said, a pretty rough week last week. So we're pretty optimistic. We're going to be looking at some better pricing later this week. And, you know, the African swine fever thesis hasn't gone away, but we can get these short-term volatility dislocations. That's an opportunity depending on what side you're on. So,
yeah. So I promised I wasn't going to talk about any China stuff on here until we had something happen, but I would be remiss if I didn't talk about the statement that was made here a day or two ago. And basically it was, we're going to have a deal done at the end of the month, irregardless of if we go back to the tariffs or if we go back to some sort of, or move forward with some kind of deal with China. So that also stirred up the markets pretty good too. Well,
I mean, I think, and Mulvaney said this, Trump said this, pretty much everyone is saying that the period of negotiation is coming to an end, meaning this perpetual every month we're going to continue to. I think what everyone is saying is this month is it. Either we get it or we don't, and obviously, you know, the market doesn't want to hear that we don't. They don't want to hear that we might not get one. I mean, it doesn't mean we won't get one, but when you move to that definitive, it's either happening or not, you know, anxiety kicks in, and that creates greater volatility. And so, obviously, with that in place now, the words of Mnuchin, the words of Lighthizer, as these negotiations are happening in Beijing this week, and apparently they'll be coming over next week, will be, I think they're going to start trading this now, because now they know we're moving to the end point one way or the other, whereas they weren't trading it the last month or two. They're going to start trading it again. And for a market like soybeans, for example, you know, that could create some gyrations there, more so than other markets, because of how important a trade deal would be for that market to get some demand, you know.
Mm-hmm. Okay, so cotton is the other thing that's I've been watching pretty closely here of late, and you're seeing more cotton acres obviously getting planted right now just because of the ability to make money on that crop in the South, where they're displacing a lot of corn acres and even some soybean acres for that matter. But on the flip side of that, it is definitely wet in that area, and they're having a hard time getting that in. At what point do you feel like cotton is going to start seeing that price decline down, and that we've seen this ride up over the past 3-4 years of cotton down from its dismal lows of 50-60 cents? Now we're getting up in the 70s and really starting to see some good numbers. I mean, how much longer can that scale kind of tip towards profitability?
Well, I mean, we really felt that when the market got caught off guard, when the USDA said that the planting intentions were going to be down, the market said, all right, we got that's unacceptable. We got to get that up. And so they moved the market up. And so they're trying to monitor, are we going to, you know, is this wet weather in Texas and the Deep South, is that going to, you know, hinder that potential, or are we still going to be able to get it done? You know, you can get cotton planted a little later than corn and still be okay with it. So we're not at the moment of truth yet. Like corn, we are moving rapidly to the moment of truth in mid-May. But I would say that, you know, if the market believes it's gotten enough cotton acres in despite the wet weather, mid-May would be the longest we could hold this market up before it would have to, give in. And we're really worried about demand for cotton. We talked about this before with you on these podcasts because we're really concerned about the global economy, slowing economy, and cotton being a very economically sensitive market. And so we think that that's going to start taking more front and center so long as the market feels enough acres have gotten planted. And we think given the price of cotton, they're going to do everything they can to get enough in the ground to make it work. So we think we're at a pretty important juncture where the cotton market could start to turn down pretty aggressively, maybe the next week or two.
Yeah. That what your sentiments there ring pretty true if you take a look at what's happened with some of the quarterly reportings that we've seen come out from Apple and Amazon and Google and those kind of companies where they're missing the mark. And it's the first time they've missed a quarter in a long time.
Google, Google, a huge miss on revenue. I think it was down 5% overnight trade a couple of days ago. PMIs, the Purchasing Managers Index in Europe and in China and in Japan, under 50, which means in sort of contraction mode. I mean, these are not the kind of things the cotton market wants to see, because cotton is and clothes is a discretionary item, and we need to, of course, have clothes, but we don't necessarily always need to be buying clothes. We can just pull back when we're a little concerned, and so we're really worried about that, and so we think that's going to be a more important driver once we get this planting concern out of the way, which we should over the next week or two. So.
Yep. And every other news article I read or listen to on the TV, we just missed this recession. We just missed it. We just missed it and everything else. Well, if you just miss the recession, there's going to be a little hangover there somewhere that's going to cause some trouble. So that's my concern with the cotton market as well.
Yeah. So we're fairly constructive on grain markets because of this weather pattern that's developed. And the possibility of a positive outcome for trade, but on cotton, we're distinctly bearish this market. We really don't see a lot. We think if we were looking for an important low in the cotton market, we might be looking for it post-harvest, fourth quarter of this coming year, when we think we factor in, this demand side problem, probably, increased production everywhere in the world. Everyone's, India's going to have increased acres. China's going to have increased acres. We think that might be a more important place to look for an important low, not now. So
okay. Absolutely. Okay. Well, Shawn, plenty of stuff going on. And if folks want to reach out to you and pick your brain or kind of get an idea of where you think things are headed, how would they do that?
Our website is Hackett, Hackett, advisors.com. All kinds of videos, podcasts, webinars, sample reports for them to take a look at what we do to see if our services might be of interest to them.
Right on. All right, Shawn, take care of yourself and have a good rest of this day. We'll talk to you again next week. And Shawn and I are actually going to do a podcast here. We're going to record it on Friday, but we're going to put it out next week. And it'll be kind of talking about what he sees happening with some sun activity and how that's going to affect the weather moving in long-term down the road. So make sure you guys check out Global Ag Network and go there and get all the different content that's out there on the podcast world. And until then, Shawn, have a good one. We'll talk to you next week.
You too. Look forward to it. Thanks.